Yo, what is up? It's Hunter here, back at you with another valuable video. Before we get started, I'm going to be beating on the same drum with this video. Perfect trade setups. I'm going to continue to beat on that drum because I know it works. Okay, before we get started, what I want you to do is like and subscribe. For one, go in the comment section below if you want a video shot for you. If you're struggling with something, put it in the comment section below on these videos, and we'll look at it. We'll see if we can get your problem solved. And also, guys, in the description, if you want a mentor, you want somebody to push you, you want somebody to help you hold your hand, go join our academy. Okay. It's a lot of value. It's a drop in the bucket. Okay. If you don't have the funds, wait for us to go on a sale. Okay. But anyway, guys, it's a drop in the bucket. You know, we literally have 2 weekly calls where you get your questions answered. We have trade live every day. And also, guys, go join our Telegram, free Telegram chat. I'm going to be dropping some signals soon in there. I know I've been talking about it. I really don't like signals, guys. I'd rather teach you how to fish than, just feed you. That does nothing for you. It makes you lazy, things like that. It's just not good. You guys know if you've been a part of signal groups, they only work for a little bit and then they suck. Work, suck, work, suck. It's because guys are getting in the trades late when they're being called, and they just don't work. They just don't work unless it's a copy and paste type of deal on your account, right? So let's dive in. Let's dive in deep. Like I said, go like and subscribe. That boosts our algorithm on the channel, and it gets us to reach more people. And that's what we initially want to do. I know that we're driving a lot of value on this channel, right? And that's the reason why I'm staying consistent with the perfect trade setups because I know it works, right? So let's dive in. Share my screen. Okay. Here we go. So we're going to start with gold. As you can see, let's go to the higher time frame. You can see that these relative equal lows got ran out. Okay. And I know you see the big M pattern. I know that's there, but you can see this big order block here is pretty much on all order block here that it stopped at. I was looking at this area as this went down and fast moved back up. I was looking at this area to react. Okay, after we ran out liquidity. Okay, so I was like, cool. So the daily reacted to it. I was like, awesome. Okay, so I go to the hour time frame. Guys, don't try to pick tops and bottoms. Just don't. Well, let the market shift and then start to react, right? So you can see here, we started moving down. We took out this relative equal low. Bam, we reacted. We shifted. We broke some highs. And then we had our 1350 cross with a peak formation lock. And then boom, right? So, and guys, I higher time frame, I'm still kind of bearish. But when I see reaction, I'm an intraday trader because I can get a move in here and be happy, right? I can get a move in here, and I know for a fact that I'm not looking for a swing. I'm not looking for 3 or 4 or 5 days of swinging. I'm not. I'm looking to get my trade set up. I'm looking for a perfect trade setup. Listen to that. Set up. That's what I'm looking for. So if it's in here and it meets my requirements, I'm going to take it, right? So look, let's see what's relevant. You can see here that it left a footprint as well. It left an order block here as it moved. Okay, that's an area that I was paying attention to. But it also left this big imbalance. Okay, and also what makes this trade even sweeter, if it did, is when you go from swing low to swing high. If it pulled back into a discounted price, which it didn't, it missed it by a little bit, which doesn't make it a what I call a 90-10 trade. 90%, this is going to hit, 10% will lose, right? So this was in the kind of 60-40 mark, which was okay with me. You got to risk it to get the biscuit, right? So I see that, okay, if it gives me what I want inside of here, then I'm going to take the trade. Okay, so you can see here that London set the tone for the pattern. I know that it was relative equal lows, and I was like, man, this thing could definitely ease down and take out these lows and set the tone for the trade. But I was looking at the dollar. You can see that I look, pay attention to the dollar, and I was seeing the dollar continue to drop. So I was like, cool, we'll look at the dollar and continue with that. So you can see here, we can even redefine the imbalance. You can see here that this imbalance, and we pull into it. Then we broke up to the upside. But what did we do first? We accumulated, we manipulated, and then we broke up. Okay. So I was looking for a what? Once I got into New York, I was looking for my trade setup. You can see here, had my eyeballs on this right here, this imbalance right here. I was like, man, if this comes down here and wicks, and I was like, I kind of want to see it aggressive. So when equity, I don't know why this line is like that. Wow, MT4 for you. So this imbalance, tiny. We can go to the lower time frame. You can see it even better. Okay, you can see that inside of here. Okay, that little, we can even go to the 1 minute and see it's even better. But you can see that aggressive movement. What time is that? Okay, that time is equity hour. Okay, you can see here 1300, 1330, 1430. We started to drop. So equity was dropping and sending it down to get out trailers, take out liquidity, get back into these voids, these imbalances, and then we set the tone for trade. As soon as we broke up to the upside, as soon as we started seeing reaction off that area, I was like, okay, let me roll to the 1 minute and let's see if I can get a sniper. And we did. Okay, we did. You can see that. You can see that imbalance that was right there. Wow. Let me just get the TD off. So it quits doing that. Okay, cool. So you can see that area was there, and we pulled into that. Okay, and once we broke down, we pulled up. I wasn't making a rational decision yet. Okay, irrational decision. We broke back down. We broke back up, and once we broke this, I was looking for my setup. I was looking, okay, when can we pull into something that is going to be my trade setup? So once this candle closed, I seen this imbalance. Once this candle closed, I seen this candle didn't fill it. So I was like, cool. There's an imbalance right here. Okay. Boom. So what I did is I set a limit order inside there. Okay. And we got busted. Let me just put my trade manager on pencil. So you can see here, set my limit order. I set my stop loss below that low, and I targeted that liquidity, which was right at a 2-to-1, 2-to-1 risk reward for me. Boom. So it was easy. It was an easy trade. Simple, easy, fast. Look how fast it happened. Right? So it all does with patience, guys. Patiently waiting for this trade setup. And you can see on the higher time frame, look at that. We set the pattern. We are moving up. Our direction is up. We come back into a point of interest. We move up, comes back down. We get a what? Is that a discounted price from there to there? Absolutely. Absolutely. It pulls all the way back in. I don't have the other levels on, but that is discounted price right here. So you're buying at a discount, an optimal trade entry, boom, go. Okay. You could have took out this high, took your money, took out this yesterday's high, and took your money. Perfect. Same thing with EU, guys. Look at EU. EU is perfect. EU is perfect. You can see here on the daily time frame, go to the daily. We're at a significant low. Just go to the weekly, monthly. Look at the monthly. You can see over here, where are we at? If we draw an imbalance right here on that imbalance, and you can see the reason why, guys, is I was looking at the dollar, and you can see, let's go to, you can go to GU. So, guys, if GU is going to react to the upside, EU is going to follow. And if the dollar is going to move down, then I know that I'm going to be bullish on EU. So it was easy for me to make a decision on that. And we just ran all that, all this liquidity here, right? And we pulled into this imbalance here, and look how we reacted. And I waited, guys. That's the thing. I waited for it to happen on the daily. Look how we reacted, and we had a daily candle break these previous daily candles. So we were breaking structure to the upside, right? Ran out this low, grabbed a little bit more liquidity, ran out these highs, broke structure, and then we pulled back and gave me what? Gave me the trade setup. That's what I look for. Okay. So look, we got an imbalance here. Okay. We pull into that imbalance. Sorry about that. Pull into that imbalance perfectly. Okay. Look how on the 5-minute, London sets the tone for the pattern, right? This is a W pattern that I teach. But look at the divergence on that trade. It's perfect. Boom. Okay. Divergence on that trade. So boom, we break up to the upside. Remember, accumulation, manipulation, real move. Okay. So I'm like, okay, like I said, we're gonna either gonna have a reversal or we're gonna have a continuation. So now let's pull from here to there. Did we come into a discounted price? Absolutely. Is there points of interest? So you got to think about it. This little move down, guys. It's an order block on the higher time frame, right there. Go to 30-minute. You can see that little order block there, and we had an imbalance right here and right there. So you can see as we broke up, we started to get our entry. Okay, so all I did was I set a limit order right here. Once we stabbed in, and I got into equilibrium. I even had limit orders at 62, just in case it did come back down, and then it flawlessly went my favor. Okay, so but look at that's also a continuation optimal trade entry, guys. You can see here. Look at the and it's just really easy right here. Look at the divergence. Okay, look at the divergence. Look at the let me draw it here. Look at the displacement. Look at these little candles, right? You see the little candles, and then boom, you get this spike above, right above the 13 EMA. That's one of my entries too as well. So as well, guys. So you can enter right there. Boom. You could have had a 10 pip stop loss. I didn't have it. I had a little bit bigger, 20. And then boom, you're off to the races. You're attacking the high. You're attacking the high where people were selling, right? And then you're asking, well, Hunter, if I missed that move, where could I have got in? So what I teach is like what your initial move, okay? Your initial move. You want to be at a discount price, right? So if that swing from that swing, okay, from this swing to that high, okay, once it comes back into a discounted price, I want to see if this is pulling into something that is relevant here on this swing, which would be order block, point of interest, imbalance, something like that, and giving me a shark fin. You guys know that I love my shark fins. So if this is this giving me a shark fin, and is it at a discount, and is it pulling into an imbalance? You can see that it did. Okay, this didn't come all the way down into a discount. It's okay. You can see that the pullback was really good. We pull in, we wick off of it, and then we give the trade, right? And then after it does that, you can sit here and you can say, I'm going to wait for another imbalance and then retesting that balance to take the trade. You can do that. Or you could take the 13 above. You got into the trade, a little bit of drawdown. If your stop was below here, you never got hit, right? Or you could have took the trade right here, right? Bullish candle, leaving a void, okay? Right there. You could have put a limit order once this closed, okay? And then look how that trade pulls into it, okay? And then boom, see it. Raping the highs, okay? Boom, 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 boom. Going after highs, going to the higher time frame. See what's relevant up there, right? So if you got in right here, you're chasing that, and what's relevant to the larger time frame. You have imbalance here, okay? You have order block here, more imbalance there, okay? You can even go as far as what's your institutional levels, double zeros and 50s like we teach. You can say, let me fix this for you. Edit. Let's turn these off for a second because I like the 50s and double zeros. I really, it's just like you could have been like, okay, if I got in down here, I'm gonna if I'm at 9,700, right? Then I know I'm in a 100 pip box. I can go another 100 pips, and it did. Look how it went all the way to 100 pips. You can see that it even reacted to that area, right? And then went another 50, right? So you can base your trade off these type of things, right? So I'm going to continue to beat on these drums, guys, just because if you wait for setups like that, you're going to win. You're going to win trades. Stop trying to trade every day. Stop trying to trade every move and trade what is going to give you results. And that's these setups. Okay. And guys, the shark fins. Shark fins are really good. Let me show you. Shark fins are really, really good when you're going the direction that you need to go, right? And then you watch them take liquidity. Okay. Watch them take liquidity or let them pull back into a point of interest. And they're really good, right? So let me elaborate. Shark fin, liquidity. Shark fin, liquidity, right? I can keep going. I can keep going with EURUSD. Even going in the direction. Shark fin, liquidity. Okay. Shark fin here, even being a counter, shark fin there, took out all those lows. Shark fin here. Okay. Shark fin here, took out that high in Asia. I know I don't have the boxes up here, I'm just saying. But you can see here, this shark fin, but you got to make sure this is in your timing, guys. You have to make sure this is in your timing box. If you're outside your timing, you're shooting yourself in the foot. You might win some trades, but you're shooting yourself in the foot. Here's a perfect one. Here's a perfect one. Like, here's a perfect example. If I'm trading New York, right, and my direction is up, I want this shark fin. I don't give a crap about this shark fin, even though it did take out liquidity at a minor level. You can see the shark fin 30-minute, and I'm saying 30-minute, hour, 15-minute shark fins, guys. They're very, very powerful, right? And you can see, because you got to think about it, guys, this thing came out of the band when this candle was jumping down, right? So if it's taking out liquidity, then I'm going to go to the chart and start analyzing my pattern. Okay. I'm going to start putting all my confluences together, right? If my direction is up and I have an imbalance that it just pulled into, right? You can see the wick. Liquidity pulls into an imbalance, hits an order block, gives me a shark fin. My direction is up. Guys, there's the stuff right there. That's all you need. And now I'm going to look for a pattern. That's all you need. I'm going to look for a pattern. It's perfect. It's perfect. Then you take the trade. Voila. Take the trade, reap the benefits, and you continue. Right? That's how this works. Perfect trade setups, guys. Trade them. Trade them. Trade them. Trade them. Trade them. If you guys, if you're in the lower time frame, you just can't. You're just like, man, I don't know. Go to the higher time frame. Look at the market. Right? Take some noise out of it. Take some noise out of it. Okay. So with that, guys, I know that's value. I keep beating this drum. And this is just my style of trading, guys. This is what I've accumulated. This is what I've seen that works for me. You know what I'm saying? The TDI might not be for you. You know what I mean? But at the end of the day, everybody that gets a strategy, it's like it's a light bulb goes off in their head. They'll adapt it to how it works for them, right? Just use the principles, because the principles that we're teaching, balances, liquidity, direction, things like that right there will be a big impact in your trading, because them things are very, very relevant. You know, they work time and time again, and they continue to work, and they've been working in the past. They work now, things like that. So just to develop it how you see it, how it works for you, and just go with it. Do 50 trade assessments. Stop strategy hopping. Stop going off of 5 trades and being like, and it doesn't work. Do a 50 trade assessment, then reevaluate what's wrong. Because in that 50 trade assessment, you're going to figure out who you are as a trader, right? Then you're going to go back to your losses. I promise you this. You'll go back through each individual loss and win. You'll be like, what the heck was I thinking? Right? That right there could not have been a loss. It could have actually been a trade that I didn't take, or it could have been a win based off fear or greed, right? Because guys, I'll tell you exactly what I struggle with. I struggle with taking profit. I'll be in a really, really, really good winning trade, and I'll be like the other day, last week, I was in 100 and I think 107 pips in profit on gold, and I didn't take my money. I was like, I'll just keep letting it go. Came all the way back to my break even. You know what I'm saying? And that's what's good about taking partials. So, and then once the trade comes back to your break even, it does something to you mentally. You're like, well, should I get out, or should I just let it, or should I move my stop loss back down and and let the trade play out? That's the worst thing you can do. Just let it hit your break even. You just learn from that, right? So with that, guys, I hope you got value. Like and subscribe. Go join the Telegram. Drop a comment. If you want mentorship, there it is in the description below. I'll see you guys in the next one. Peace.